Masser in Boston, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, all week long, we're looking at the best that Boston's burgeoning tech hub has to offer. From stalwarts to startups, we discuss what's on the cutting edge in some of the city's biggest industries. Plus, stocks slide as the trade war escalates with Trump tweet threats and China hitting back. We break down the biggest movers on one of the most volatile days for the market this year. And one of the biggest losers of the day was, of course, Uber. Its IPO debut sours even more. Can the company shake off the skepticism around it? And we are coming to you from Boston this week, traveling around the city and showcasing the innovation, diversity, and power of the regional tech economy that's in Boston. Boston, known worldwide for its higher education. It includes 70 top science graduate programs. It's an area where 49% of adults have college degrees, 40% of which are in science or engineering. And today we're at the Massachusetts Institute of Technology, MIT. Last year, the school announced a $1 billion investment in AI research and education with the MIT Schwarzman College of Computing. We'll have more on that a little bit later on, but first up, we've got to get to our top story. U.S. stocks turn in their worst day in 4 months as global trade tensions enter the forefront. And tech, well, it was certainly among the worst performers, with Apple and Uber standing out. Let's go to Bloomberg's Pim Fox in New York with more. And Pim, no doubt about it, this was a tough day, certainly for the bulls out there.
Yes, that's right, Carol. But let's just point out that what happened to Apple today can also be connected to a 5-4 decision at the U.S. Supreme Court. It has to do with the amount of money that Apple remits to those developers that offer up their apps on the Apple iTunes or App Store. Now, this ruling could also affect Google. It could affect Amazon and Facebook, any company that really has apps or third-party software that they sell online. The way it works right now, this is an $80 billion a year industry. It's projected to increase to about $160 billion by 2022. And the idea is that Apple takes a 30% cut and then remits the remainder to the actual developers. Well, the suit that will now go forward contends that that's too much and that Apple has to change its ways.
All right, so that's certainly what we're watching, and we're going to get more on kind of the legal side of that in just a moment, and the legal implications for Apple. But talk to me a little bit about the market sell-off that we saw, Pim. I think I saw at one point maybe utilities were safe from the sell-off, but talk to me how broad-based this market day was in terms of the decline.
Yeah, well, let's put it this way. I think only about 48 issues in the S&P 500 managed to have a gain today. The NASDAQ composite is down 3.4%. To follow the technology theme. That's the technology-heavy index. You've seen the S&P 500, which actually is up about 12% so far this year. The S&P 500 having its worst day since January. And a lot of this can also be tied not just to the back and forth over the trade talks between the United States and China, but also the ending of earnings season. And we've seen this repeatedly, that, you know, there's a move higher in equity prices going into the earnings season, and then afterwards we see a backing off. So it might just be an issue of profit taking, and of course having all this negative talk about the trade negotiations isn't a big help.
All right, going to leave it there. Pim, thank you so much. But we certainly did see the tech sector taking the biggest hit of all. Uber, another name that was down today, down about another 11%. Well, as Pim mentioned, meantime, the U.S. Supreme Court has ruled against Apple, allowing consumers to press ahead with a lawsuit that accuses the company of using its market dominance to artificially inflate prices at its App Store. Bloomberg's Greg Storr has more details from Washington with that story.
In a 5-4 ruling, the Supreme Court said consumers can press ahead with a lawsuit that accuses Apple of abusing its market dominance and overcharging for apps on the App Store. The case turned on a decades-old Supreme Court decision that says only direct purchasers can sue for damages under federal antitrust law. Apple said that ruling barred the suit and that it's really just a middleman connecting app developers with users. But the Supreme Court disagreed, saying consumers buy apps directly from Apple. Apple said in a statement it's still confident it ultimately will prevail. The company said the App Store is, quote, not a monopoly by any metric. But by letting the suit go forward, the Supreme Court opened the company to the prospect of hundreds of millions of dollars in damages. Perhaps more importantly, the ruling puts more pressure on Apple to reduce the 30% commission it charges developers. That commission was a key focus of the lawsuit and will be going forward. Google similarly charges as much as 30% at its competing Google Play Store and might be affected as well. And the ruling might open other companies that run online marketplaces, like Amazon.com, to new consumer lawsuits as well. We'll have to watch to see if those develop. One final note, the ruling produced an unusual breakdown at the court. Justice Brett Kavanaugh joined the court's liberals in the majority and wrote the opinion. The other Donald Trump appointee, Justice Neil Gorsuch, wrote the lead dissent. I'm Greg Storr for Bloomberg News in Washington.
And coming up next, robot recyclers, how MIT is using robots to improve recycling and keep the planet clean. That's next. And if you like Bloomberg News, of course, check out all on radio. You can just listen on the Bloomberg app, Bloomberg.com, and of course on in the United States, I should say, on SiriusXM. This is Bloomberg. Before last year, China imported about 40% of U.S. recyclables. However, a recent report, an import ban on over 24 recyclables, has researchers estimating that 111 million metric tons of plastic will be left with nowhere to go. So students at MIT's Computer Science and Artificial Learning Lab, they have developed a robot that can actually identify and sort recyclables. It's dubbed RowCycle, that could help really sort through the pileup that's out there. Take a look at this.
For more than 3 decades, China has been one of the world's biggest importers of plastic waste. That's changing. Last year, China closed its doors to over 24 foreign recyclables, sending countries scrambling to adjust their recycling systems. Before the ban, China imported about 40% of the United States recyclables, and researchers estimate that the new policy could leave 111 million metric tons of used plastic with nowhere to go. Now one team of researchers at MIT is looking to sort through the pileup. Students at MIT's Computer Science and Artificial Learning Lab have developed a robot that can actually identify and sort recyclables. Dubbed RowCycle, the system includes a soft Teflon hand that uses tactile sensors to detect the size of an object and the pressure needed to grasp it. From there, it can determine if it's made of metal, paper, or plastic and establish a motion path. As it stands, recycling centers are tasked with the costly process of sorting and separating waste, and mixed materials can become unrecyclable altogether. Approximately 25% of all U.S. recyclables are so contaminated they must be sent to landfills instead. The team says RowCycle can tackle the problems of today's single-stream recycling systems. RowCycle also provides a safe alternative to human labor. The device can be punctured by a needle more than 20 times with minimal damage. One complication, replicating human intuition is no easy feat. While RowCycle can accurately detect stationary materials 85% of the time, its success rate drops over 20% when objects are placed on a moving conveyor belt. Meanwhile, companies such as Zen Robotics and Amp Robotics are building their own sorting robots using camera and computer vision and estimate that the technology can cut recycling costs by as much as 50%. Reducing contamination is a top priority for the United States. Could a robot such as RowCycle be a step in the right direction, or will America have to find a new dumping ground?
And now we want to welcome the director of the MIT Research Lab, CSAIL, that created the recycling robot you just saw, Daniela Roos. Daniela, so nice to have you with us. So nice to be here at MIT.
Welcome. We are so delighted to host you here today.
It's fascinating to see what RowCycle can do. We think about artificial intelligence. We think about robotics. Have we just scratched the surface? I mean, where is it all going?
Wow, it's such an exciting time in these fields today. Just think about the fact that 20 years ago, computation was a task reserved for experts, and today we depend on computing so much we don't even notice how we depend on it. And the next wave of technologies, the AI, machine learning, and robotic technologies, will do so much more for us.
Like what? Like what? Because we constantly hear that, and we've been hearing that for a while.
So let me give you lots of examples. Going from row cycle, imagine garbage bins that will take themselves out. Imagine automated infrastructure that will ensure that the garbage is taken away. And systems like row cycle enable the correct sorting of all that garbage so that it's environmentally good. Imagine fresh produce that shows up on your doorsteps delivered by drones. Imagine intelligent assistants, whether they're embodied or not, that ensure you optimize your life to live well and to work effectively. Imagine transportation systems with no accidents. Imagine personalized treatment plans. Imagine all these possibilities that remove the routine work from us and ensure that we have time to think critically, to think creatively.
Now, what do you say to people who hear this and they say, okay, this means the replacement of so many different jobs that are out there? Or is that where we're going, or is it more the case of robotics working side by side with humans?
So I hear a lot of anxiety and concerns about AI. I have worked in this field for many years, and I want to assure everyone that the concerns around an AI apocalypse are greatly exaggerated. But we have to understand the fears of those who are not sure what the technology can do. And this starts with understanding that it is important to provide people with alternative viewpoints for how to see things differently.
Right.
And this starts with understanding that AI and robotics are tools. They're just tools created by the people for the people. And like any other tools, they're not inherently good or bad. They're what we choose to do with them. And we can choose to do so many things, like removing road accidents, offering personalized medicine, ensuring that people can communicate instantaneously no matter what language they speak.
But how soon before we certainly have started to see a trickle of the impact of AI and robotics certainly on our society, but how soon before we really feel a much bigger impact?
Well, we already have tremendous impact because with AI technologies, medicine is getting so much more precise and personalized. We see the potential of optimized transportation systems that deliver goods and people much more efficiently. And in the future, we will see so much more.
Now, you guys work with so many different well-known companies that certainly are familiar to our audience: Toyota, Microsoft, Google, IBM. They've all opened up major facilities in Cambridge in the last few years. Talk about the collaboration between academia and the private world.
Well, it is really critical that academia and the private world get together to solve some of the world's greatest challenges. By working with companies, we understand where the pain points are, and we can direct the science towards those pain points. We can also show companies what is coming around the corner, what the technologies that will disrupt are coming.
Well, that's interesting that you say that, because I think about self-driving cars, and if you go back, I don't know, 5 years or so, it really wasn't until Tesla came on the scene that people really started taking it very seriously. They really kind of pushed, I think, everybody to move forward. What are some of the technologies that you think we're not quite yet talking about much, but will certainly be a big deal just around the corner?
Well, around the corner, we will see a whole different category of robots. Today, most of the robots we see are inspired by the human shape. They are either arms or humanoids, or maybe robots on wheels. And in the future, we will see robots that will be able to work side by side with humans, robots that are made out of soft materials, robots that are made out of a variety of materials, whether it's paper or silicone or plastic or traditional materials.
More human-like? Is that where it moves towards?
Well, more variety of machines and more variety in the scope of the machines.
So what are you doing, as I've been walking around here seeing students working in groups, to prepare students for what's going to be needed for the future in terms of the world of robotics?
Well, we are offering a wide range of important classes. In fact, machine learning is a very popular class these days. Last year, over 700 students took machine learning. We're also offering free classes online, and we're creating new blended disciplines and academic degrees that enable students to co-train in technology and something else. For example, we just launched a degree in computational urban science where we're co-training students in technology and policy.
Interesting. Really, really fascinating what you guys are working on. Daniela, thank you so much.
Thank you.
Really fun to be on campus with you. Daniela Roos, she's director of MIT's Computer Science and Artificial Intelligence Lab. Thanks so much for joining us. All right, coming up next, everyone, we're going to take a look at Boston's biotech scene, why Third Rock Ventures continues to bet big on gene editing technologies. We'll get into that in just a moment. This is Bloomberg.
Markets sharply lower in news that U.S.-China trade talks just might be in trouble.
As the U.S. administration ratchets up the pressure,
the U.S. raised duties on Chinese goods to 25%. Beijing confirms it is ready to hit back.
That's really where it's all started. We are looking at a big down day for stocks around the world. And of course, this has a lot to do with trade tensions.
Well, Boston is home to a number of biotech companies ranging from small startups to billion-dollar pharmaceuticals. Alexis Borisy, his partner at Third Rock Ventures, is no stranger to Boston's biotech scene. The company currently holds 28 Boston-based companies in its portfolio, and Alexis joins us now. Welcome. So nice to have you here.
Carol, it's a pleasure to be here.
So tell us, you guys have been around, I think 2007 you started.
Correct.
And you got out on a mission for personalized medicine. It's been more than a decade. What's changed in your thinking and your approach to personalized medicine from then to now?
Well, the first thing is, 10 years ago, it was a hope. We now have multiple medicines that have been approved by some of our portfolio companies and that will be approved soon. So it's working.
That's good.
That's good. That's great. And it's remarkable how much broader the tool set has become. It used to be traditional drugs.
Right.
Today, it's beyond just traditional drugs. We have gene-modifying gene therapies and cell therapies as well. So the tools that you can use to really make these breakthroughs has just matured incredibly.
Changed very dramatically in terms of traditional pharmaceutical versus what we can do today, or
Correct.
potentially what we can do today.
Correct.
How quickly, though, does all of this, stuff has started to come to market. How quickly, though, do we start to see really a dramatic disruption in terms of how we treat patients?
Well, we're starting to have the first gene therapies approved now,
right.
And the first cell therapies approved now, when just 10 years ago, they were really sort of a sparkle in people's hopes.
Right.
So that's remarkably quick, and whereas there's one or two today, I think we're going to be seeing dozens of them over the next 10 years.
I want to ask you about your Relay Therapeutics that you guys you raised a lot of money and private capital for a biotech from SoftBank and other investors. What's next for Relay, though?
Yeah, so it's another major interesting trend at the moment where you're having the life sciences intersect with technology,
right.
with computational power, with machine learning. And so we're able to just do things today, again, that maybe a decade ago we might have hoped for, but we can actually do them now, which means we can use the computational power, in the case of Relay, to design drugs against biological targets that we've known we've wanted to create a drug against for the last 10, 20 years, but we haven't been able to. But now we can, and we can do it really, really quickly. Relay has created a drug against a target that we have known in the field has been important for several decades, and Relay was able to do it in the course of 2 years.
Which is remarkable.
And before, it was impossible.
So everything goes much more quickly. What's the next step for Relay? Is an IPO soon on the horizon?
Well, Relay's been fortunate at the amount of private capital
right.
that it's been raised,
right.
so it doesn't have to turn an IPO immediately. I think it's going to move some of its programs forward and scale what it's doing because the potential there is so large. But one can imagine an IPO at some point in the future.
I want to ask you what you think the main risks are to the industry right now in terms of biotech, especially when we have a Congress, a Washington, that is really just focused on reducing the cost of healthcare, specifically reducing the cost of pharmaceuticals. And I think of some of these treatments, they're not going to be inexpensive. So tell me, is that the major risk, or is there something else?
Well, I think you've put your finger right on it. I mean, it's interesting. We're at a time where we have this technology that's offering truly cures, where we can actually use the word cure. And you're right, they're not inexpensive.
Right.
And people are frustrated broadly, and maybe, deservedly so to some degree in some ways. But in this moment of time, you worry that Washington will take a blunt solution or a blunt instrument and cause unintended damage to the entrepreneurial ecosystem.
What excites you about biotech right now?
Well, it comes back. We're creating cures for real. Like it used to be when I first got into this business. That was a word you said softly because you didn't want to lose your credibility. People didn't believe. Today, we actually can. Not for all diseases.
Right.
There's still a lot of hard work to be done. A lot of things we don't understand. But where we do, we're beginning to offer therapies, back to that precision medicine, that really make a huge difference for patients. And that's the best thing.
I think about all the money that you guys have raised, and it says that it affords you an ability with companies to stay private. In terms of returns for investors, can you talk to us a little bit about what kind of returns you've seen?
So we've been very fortunate. Third Rock, our first several funds, have led the industry and have had just incredible levels of returns.
Okay.
So it's been good.
It's been doing well, and
yes.
it's ensuring you that more money is coming in.
That's correct.
It's interesting, too, and I think about big pharma and big biotech. They've been pretty active right now, another wave of consolidation. What kind of firms do you think that they're looking for, and where do you kind of watch within the industry that you think will see more consolidation?
Well, so there was an interesting statistic that was just recently published that said for new drugs being approved, more than 2/3 of them originate now in small biotech.
Right.
Which are
but hasn't that always been the case?
No, so go back 10 years, go back 20 years. It was the reverse. Well, actually, 20 years ago, mostly came from large pharmaceutical companies. 10 years ago, it was 2/3 from large pharma, 1/3 from biotech. It's now 2/3 originated from biotech. And interestingly, another stat, last year, 50% of the new launches were being commercialized by the small companies as well.
Right.
So I think it shows you that power of the entrepreneurial ecosystem represented here in Kendall Square and MIT.
So in terms of like machine learning, AI, the use of data, we're getting smarter with it, more specific. Just got about 30 seconds left here. Where does it lead us to in terms of modalities and treatments, and how quickly?
Yeah, I think that the great power where we take the machine learning and intersect with the life sciences, hopefully it's going to reveal the places where we don't understand the disease today, so we can aim the precision medicine, places like Alzheimer's that we just haven't solved yet. And then two, can we imagine a future where the productivity of the industry is so much higher, instead of having, say, 30 or 40 or 50 drugs approved a year,
right.
Could it be 100 or 200?
It's like amazing. Alex, thank you so much. Really appreciate it. Alexis Borsi of Third Rock Ventures. Coming up, everybody, we're talking tough tech with Katie Ray, how her MIT-founded venture fund, The Engine, is taking a more patient approach to investing. That's coming up next. This is Bloomberg Technology. I'm Carol Masser at MIT. Well, forget speedy turnarounds for your investing. That's what the Engine CEO, Katie Ray, is preaching. She's focusing on something called tough tech for her venture firm that was co-founded with our hosts at MIT. And she joins us now. Hey, great to have you here with us.
Thank you.
I said to you I have a million questions for you. But first of all, I've got to ask you about the market volatility today. We certainly saw investors really kind of freaked out because of the U.S.-China trade talks, or lack thereof, in terms of progress. I do think about your fund. Some of the funding comes from MIT, some of the funding comes from others. Do you worry about market volatility impacting the flow of funds into it?
I mean, you always worry a little bit, but I can't control that. So what we think about is the long term and what are the right areas of technology to invest into. So we're thinking 5, 10, 15 years out. So little market blips, we don't worry about that much. We do worry about China-U.S. competition. We do worry about how that will affect a founder's ability to tap the world's markets. But, you know, again, I don't have control over that. So we have to work with what we have.
That's interesting. So you say a founder of a company, right,
Yes.
being able to tap the world markets.
Yeah.
Right, if we don't have those trade flows. That's a really important way to look at it. I want to talk too about some of these founders that are coming out of the engine. Tell us a little bit about the work that you guys are doing.
Yeah, so we bet on really breakthrough next generation technology. So you think about all of our biggest problems. How are we going to provide clean energy? How are we going to feed the world? How are we going to actually cure disease? How are we going to create next generation industry and infrastructure that will allow us as a species to blossom? Right? And those are all the areas we spend time looking at. What are the true breakthroughs coming? What could be not 2 times better, but 10, 100, 1,000 times better?
So what kind of visibility do you feel like you have for things that will be dominating in 15 years? Are there things that we're not even talking about that you think will be dominating our work and personal lives?
Yeah, I mean, I think most of our energy will be clean energy.
You do?
I really do. I think we'll know how to make it in a clean way, and we'll know how to store it. So one of our companies, Form Energy, they're building long-term battery storage for wind and solar. So right now, you can only use wind and solar for part of the time, and you can't really power the grid with that. But if you could actually store the energy, you could power the grid with wind and solar. Or fusion energy. You know, I think we will be at a point then where we will know that we will be able to create net positive energy with fusion. That's kind of one area we look at, but also think about how we're going to produce our food. How are we going to have less waste that comes out of our food stream? How are we going to produce the volume of food that we'll need for people? And all of that's being developed in the labs here around Boston. And people are really thinking about, you know, how do we feed our cows or so that they produce less waste?
Right.
Or how do we create meat? Beyond Meat went out last week, right? How do you do that across all the different types of food streams?
I do also wonder about, do you want your fund? Are you trying to attract more funds to do even more?
Always.
And are there flows coming in?
There are,
And
yes.
is it U.S.? Is it foreign investors?
People are interested around the world. We primarily have U.S. investors.
And I'm just curious about, because you did do, I think, your first 7 investments back in September. Just give us a couple
We've
of
done
companies.
17 investments.
You've done 17,
today.
okay.
Yeah, in the last 2 years,
Okay.
we've done 17 investments. So we did a company called Seleno Bio. They are doing a platform that will be able to truly regenerate cells to cure all different types of diseases in your body. We've done things like ASI, which are putting up a whole new satellite system in space that will allow data to come back down from space rapidly. Think about all that opens up with data. We're working on things that will speed up manufacturing in biotech or in production of metals. We look at all kinds of things like that. I mean, every day I have an incredible world working with people inventing truly extraordinary things.
Yeah, it's just fascinating. And to see that so much of what's going to come out of your lab will be things that we'll be talking about big time in 10 or 15 years. Katie, thank you so much.
Yeah, thank you.
Really, really appreciate it. Katie Ray, she's the Engine CEO at MIT. Well, we also want to take a little bit talking from tough tech to really biotech. Boston is arguably the center of the biotech world, but among all of this competition, Moderna stands out. Based in Cambridge, the company is focused on making drugs based on messenger RNA and creating their own therapies to combat health issues, from infections to cardiovascular diseases. Now, Moderna went public last year, and it turned out to be really the biggest biotech IPO ever. Now, I caught up with the company's CEO, Stefan Bancel, and we talked about what's changed since that IPO.
I think the big difference for us and for our employees is we used to share data all the time, in real time, with everybody. Because to do great medicine, you need to do science, and to do science, you need to have people understanding all the pieces. So that's the biggest change.
So you're sharing more data?
We're sharing less data.
Or sharing less data?
Yeah, because now we have to be careful of when we share data.
Because you're a publicly held company.
Right.
That's interesting. What's changed, though, in terms of the work that you're doing and the perception with some of your partners? Has anything along that line changed?
So I think this is mostly the same. We used to have partners for many, many years. Our first partnership with AstraZeneca goes back to 2013 and Merck 2015. And we've had a lot of the long-term investors like Fidelity and those type of very long-term investors for a long time. So it's the same for us.
Well, I guess what I wonder is, there is something different though, right? Between being privately held and then you become a public company, right? You do have to answer to investors. And I think there's been a lot of talk about your valuation. Bam, out of the gate, it was over $7 billion. I'm just curious, what kinds of questions are you getting more pressure from investors who are saying, look, they understand the biotech world, right? Things take a while, but you are public now.
Mm-hmm. I think, again, because we have had for many years, very high quality long-term investors, the story has been the same, which is we believe we have a technology that is to build a new class of medicines. We can do medicines that cannot be done using old technology like small molecule, traditional pharma, or biotech products. And so what is very unique about messenger RNA is that it's an information molecule. Every time we actually inject in a human, and we have done it more than 1,000 times for 1,000 different healthy subjects or patients that we dosed already. Every time we inject a human, we basically give them an instruction for their own cells to make the medicine.
Right.
And because of that, we have a platform. And because the human genome has been sequenced now, so we know all the instructions for all the protein we have in our bodies. And so we can take that information into basically our technology and very quickly give an instruction to your body of making protein you need to be healthy again.
Well, you say very quickly. How quickly, though, is it proceeding, right? Because any kind of pharmaceutical, if you will, as you know better than most, it takes several procedures in different stages in terms of clinical testing. And I think about the valuation, and at some point investors are going to say, are we in stage 3? Where are we in the process?
Yeah, so on the speed side, you want to think about two things. One is research, what we do in the labs, to understand the drug before it's ready to go into clinical trial. So in the labs, we are able to go very, very fast because the human genome has been sequenced. And because our technology is always the same, we don't have every time to invent how to make the product. It's the same every time. The only difference is the order of the letters on our message, like you have zeros and ones on a piece of software.
So same process in terms for going after the protein.
Correct.
Or creating, yeah.
Yes, so if you look today, we have 20 different drugs in development, many more in research, but all of those are made using the similar manufacturing process. And so we don't have, like I used to be, in big pharmaceutical companies where for every drug you have to invent how to do it. And so you can go very, very fast.
Can we make, though, the assumption that the efficacy, though, is going to be the same in every process, even if the process of, in terms of how you deal with an individual's body, but can we assume the efficacy is going to be the same?
So it's tough to say ahead of seeing the data because we're doing science. But the piece that is interesting is that because you make your own protein, and it's a protein that is known to your body.
Right.
Because it has been in humans.
It's like a custom medication.
Correct, and it has been in humans for millions of years. And so we're not inventing a new molecule. If you think about traditional pharmaceutical, wonderful drugs like Lipitor, Prozac, those have been invented. When we inject an instruction in your body is to make a protein that you're already making, that is natural in humans.
But and this is not going to come as a new argument to you because many people have talked to you and challenged you. I mean, it's kind of the holy grail, right? This whole idea of using the body to create a treatment, a pharmaceutical, if you will, or not really a pharmaceutical, a treatment to deal with some disease or ailment. But people have been working on this for such a long time. What makes you think you have the magic sauce to make it work this time?
So I think we are resting on the shoulders of giants. A lot of the technology we are using at the company has been invented by others over the last 20, 30, 40 years. Just one example, we use next-gen sequencing. So we use machines to be able to sequence the human genome. This we did not invent, but we are using those machines that are giving us information that we can then use to go into the technology. And so there's a lot of technology that come together to make Moderna possible. I like to say that 10 years ago or 15 years ago, Moderna could not have existed.
And that, of course, was Moderna CEO Stéphane Bancel. Well, coming up, what industries and trends are really supporting and changing the workplace? We'll hear from one investor who is working with companies who are trying to change the status quo. This is Bloomberg. take a quick break from our coverage from Boston and head to San Francisco and catch up with our Emily Chang. Emily, tough day in the markets.
Indeed. We're going to talk about that, Carol. In our work shifting series, we've been talking about the changing nature of work and the role tech plays and will play, but what about the investors who are looking to back the trends that'll define the future of jobs and the workplace? Annie Kadavi, Redpoint Ventures partner, joins me now here in the studio. She's made early investments in ClassPass, DoorDash, and more. You also used to work at Uber, so we're going to get to that since they've had an interesting day. But before we get to that, I want to talk to you about your investing approach. You say you're an anthropological investor. What exactly does that mean?
Sure. I think, all investors approach these kind of early stage investments in different ways. When I say an anthropological investor, what I mean by that is really wanting to start with how consumers are using the end products and then backing into what are the products or services that need to exist to support those types of human behaviors.
So everybody wants to talk about the future of work, but nobody knows exactly what the future of work and jobs is going to look like. What is your sort of vision for that, and then how does that impact the choices that you're making when it comes to where to put your money?
Sure, yeah. So the topic of future of work, as you know, is nothing new, right? How people work, when they work, from what locations do they work is all kind of up in the air right now, which is really exciting and can transform how we all are spending our time in many ways. So when I think about the future of work, how I actually think about it is really less how people are compensated and more the future of how people spend their time. So I look at investing in this category very broadly in three buckets. The first being the technologies themselves that are making people more effective or efficient. This is, I think, where most of the conversation around the future of work has been, so things that are AI for X or autonomy for Y. The second bucket would be kind of how do you invest in the downstream effects of those first group of products. And then the third would be the platforms or marketplaces that are enabling people to find work. So Uber being a perfect example of that.
So how are people going to spend their time differently in the future?
So, if you think about the first bucket, right, is that many jobs are going to be made more efficient. Sometimes there's the conversation that they will be replaced altogether or really just fundamentally changed. I was earlier this morning looking up some statistics on the number of farmers in the U.S. A couple hundred years ago, 90% of people in the U.S. were farmers, and today it's about 1%. It doesn't mean that there are fewer jobs in total. In fact, there are far more, but the nature of those jobs has changed quite dramatically. So, I think that it's much more likely that we'll see forms of artificial intelligence that are working alongside people to help them do their jobs more effectively for many decades before we will ever see jobs replaced entirely.
So it's interesting because you were head of strategic ops for Uber Freight, which is their trucking business. You've also invested in autonomous trucking. So is trucking a job that you think, being a truck driver, is that going to exist?
Yes.
In 10 years, 20 years?
Yes.
So how will technology offset the number of people who actually are required to drive the trucks?
Sure. So I think trucking happens to be a passion topic of mine. So things you never thought you might say. But so the number of truck drivers represent about 1% of the population in the U.S. today. It's a very common, very popular job. The average truck driver is in his mid-50s and drives a long haul truck. As you think about the pieces of driving a truck, it looks very different if you're driving a truck or car, for that matter, through the streets of San Francisco or any other major metro than it does driving through perhaps an entire state in the middle of the country when you're going from major metro to major metro. Human beings and the nature of how complex that driving is very different. Just like if you were to do a cross-country road trip, you probably are on cruise control through, when I've done it, the eastern half of Nevada, for example, versus I'm never on cruise control driving down the street in San Francisco.
Right. So, curious, I mean, first of all, you worked at Uber for a year, working on Uber Freight, but what's your take on Uber ending, it's like almost 20% down for the last 2 days, 2 days into being a public company?
Yeah. Well, obviously, it's not the start that anybody would hope for. And I think, as with anything, it's very hard to make any call, when you're just 2 days into trading, for example. Ultimately, I think the future of Uber hinges on how quickly and how much they will be able to innovate from the core business that they have today. If you look at a company like Amazon, when they first started out, they were selling books, right? they don't just sell books today. They sell all sorts of things. They also have Amazon Web Services. They have tools and services for SMBs, and not to mention Prime. That's a subscription consumer service. None of those businesses existed when they started, and so what will Uber look like 1 year, 5 years, 10 years down the road? I think is anybody's best guess.
What about what will the rest of the markets look like in 6 months? I mean, obviously we're dealing with the trade war. A lot of companies got hit today, but Uber by far among the worst, and certainly down more than the broader market. So there must be some skepticism about the business model in general. I mean, as an investor who's backing companies that are, potentially entering the public markets at some point, how concerned are you about this environment?
I think my job at Redpoint is primarily a very early stage investor, right? We're investing in the Series A's of companies. And so the future of how large those businesses can become is so far in the future that what the markets look like 6 months from now have very little to no influence on the kind of companies that we're investing in today.
All right. Annie Katavi, we'll be watching to see where you put your money next. Annie Katavi, Managing Director at Redpoint, thank you so much.
Thank you
for stopping by. Carol? So, very good point there that Annie made, that if Uber was only going to have ride sharing in 10 years, then, maybe it wouldn't be an Amazon. And as you know, Dara Khosrowshahi, the CEO, who I spoke to on Friday, is sort of trying to sell this idea of Uber as a platform, that it could be something like Amazon with freight, with scooters, with e-bikes, with self-driving perhaps in the future. But the big question is this like an $80 billion company or a $200 billion company or more? We just don't know.
Right. Time will tell on that. All right, Emily, thank you so much. Emily Chang, of course, in San Francisco. Still ahead, holding off the hackers. We sit down with Patrick Morley. He's the CEO of cybersecurity firm Carbon Black. That's coming up next. And this is Bloomberg. So on a day when increased trade tensions saw tech stocks stumble, one company actually bucked the trend. Shares of Boston-based cybersecurity firm Carbon Black, it ended up the day nearly 3% in today's trade. CEO Patrick Morley joining us now. Nice to have you here.
Thank you.
I know you said we had nothing to do with it, or you don't know that you can necessarily explain it, but it is interesting to see the nervousness in the markets, and it all has to do with U.S.-China trade. Have to ask you, as a CEO of a company that sells around the globe, how do you see it? How does it impact what you're doing at your business?
Well, as a cybersecurity company, we have an interesting relationship with certain nations around the world, particularly those that are very active from a cyber standpoint.
Right.
And China, in particular, is statistically shown to be the #1 nation across the globe that's driving cyber attacks.
Really?
Yeah, so our relationship with China is a different relationship than many other public companies across the globe. We don't actively sell into the market because we're helping many companies out there actually protect themselves from attacks that are generated out of China.
So then when we have these U.S.-China trade tensions, because you're not selling into it, it certainly doesn't directly impact you. But how do you see it kind of disrupting the world order and certainly investor nervousness, and even other CEO nervousness and corporate nervousness?
Yeah, as I tell all of our employees, we're building a company for the long term, and our stock is going to be impacted by things we control and many things we don't control. And so when I look at my app and I see red everywhere, it's certainly disturbing, and obviously that will impact companies that are going to buy my product eventually. And so if that has an impact on other public companies and private companies, it will impact us eventually.
Tell us, though, a little bit about, you recently guys gave an updated and optimistic outlook for the second quarter in terms of revenue. Where's growth coming from? Where are you seeing, what parts of the marketplace are driving it?
Yeah, we gave a consistent outlook in Q2.
Analysts thought it was up.
Yeah, I think they did react positively, which is good. And again, we're building for the long term a company that matters in cyber. I think cyber is one of the most interesting spaces in tech right now because everything around us, cyber. We come back to cyber again and again. Right. If you look at all the news about Facebook, cyber's in it. If you look at some of the geopolitical issues in Europe and in the U.S., cyber comes in. So it's an important area. And we're a new guard of company that's helping to change it and make it better, make it more effective for companies. So we're building value around the company.
Yeah, I do feel like on air at Bloomberg, we're constantly talking with, someone in the cybersecurity space, because it certainly is kind of one of the #1 concerns among the corporate community. How do you compete with some of the big guys out there, whether it's Cisco, whether it's Fortinet? How do you compete with them?
Well, some of those providers work in a different part of the market than we do. It's a big market. It's a $100 billion market that's going through fundamental change. But we do provide a platform that does compete with some of the traditional players, other public companies like Symantec and a number of other providers out there. And the way we compete is we are based on one core principle, which is if you look at where the long-term the world is going, you need to leverage the power of data in order to figure out what's happening. And so we leverage data in a way that allows us to see and to stop the adversary in ways that traditional products can't.
I got to ask you about that, because when you leverage the data to, fight against those adversaries, I mean, that happens instantaneously. Yeah. When you've got malware coming in, you really have, a fraction of a second to stop it. What's the technology that you've got that enables that to happen?
Yeah.
Or can you?
Yeah, well, you're right. I mean, Carbon Black is analyzing 500 billion security events across the globe every single day. And, of course, you can't do that with people. You have to do that with a number of techniques. We certainly leverage the compute capability of the cloud, and then we apply AI and machine learning models to that, and it allows us to actually see patterns across the globe that help many, many companies stop the bad guys.
It's a fascinating world, and there's so much going on. Patrick, thank you so much.
Thank you.
Patrick Morley, he's the CEO of Carbon Black. All right, everyone, that will do it for this edition of Bloomberg Technology. But we do have a lot more coming up in Boston throughout the week. And then tomorrow we'll dive into the world of sports. We'll be at Reebok's headquarters and sitting down with Celtics owner Steve Pagliuca.